Hello everyone, welcome back to the venture stage again. So for next, we have impact investing, money, moral, or both. Please join us to welcome our panelists Vijay and Vikram. Show to you, Vijay and Vikram.
Thank you. Thank you so much. Hi, Vijay. Uh, and I think, we are going to follow more of a interactive session here, I guess. And, I'm going to start with a very brief, introduction on what we are doing at IvyCap. And I think then Vijay will talk about what he's doing and, a few slides on his background and what the work he's doing. And I guess after that, Vijay and I can have a more of a discussion, right? Vijay, is that all right? Awesome. So I'm going to share my screen, and then I will just talk about what we are doing at IvyCap, and then I guess and if there are any questions, we can take those questions also a little later. So I'll just spend a few minutes on talking about what we are doing. So, we currently have around $200 million of assets under management. We are managing two funds. We are in the process of now setting up a third fund, which is a $300 million fund. Our differentiation lies around the fact that we operate through the ecosystem of the IITs and there are about 400,000 alumni who actually invested in the fund. And in addition to that, we have a large number of Indian LPs. This is including the large banks, insurance companies, the government of India who invested in the fund. We have a total portfolio of about 20 companies, 2 exits already done, 2 write-offs, so there are about 16 companies right now. And we invest the ticket size of anywhere between 100 and 140,000 to going up to $7 million across different sectors. And what we started doing now is, in addition to applying the lens of, various factors, including the team, the investment stage, the sectors, etc., we apply the lens of SDG goals, which I'll come to in a minute. We also have a platform called IvyCap, which actually has a large number of startups. Currently, we have 4,000 startups, curated startups on the platform, about 30 plus accelerators, about 30 plus corporates, about 500 investors, 30 plus universities on the platform. And this is actually managing an ecosystem, not just in India, but now even expanding globally, but currently very deeply rooted into the Indian ecosystem. This we've been working on this platform since 2015, and where various corporates also engage us to actually work with various startups, and accelerators also work with us. We are also managing an angel fund through this platform where we are investing at seed or pre-seed stage. Our team actually has a lot of experience, and we have a board of advisors who come from diverse background. We also have representation from the IITs. As you can see, various deans and faculty of the IITs actually on the board of advisors as well. Our Fund 3 is actually integrated with the Sdg Framework, and this is a $300 million fund that we are in the process of setting up right now. And we already have some kind of soft commitments of about $100 million from our existing investors, and they're in the process of raising the rest of the fund. Of course, we are currently structured in India. We also have a structure in Mauritius, and we are now in the process of setting up a Singapore structure. I wanted to just showcase our portfolio, how this maps onto the different sectors or different SDG goals. And as you can see here, there are investments that we made across different sectors, including consumer. We have 6 investments in that space. Fintech, we have 3 companies. SaaS, e-commerce, we have 2 companies. These are 2 companies that we've exited already. Then there are enterprise solutions. There's an agri-tech company. There's health tech. And we are, as we speak, we are in the process of making a few more investments, and we're likely to make 3 to 4 new deals over the next 3-4 months. In fact, some of our deals, including Conversite and FinPay, were actually announced over the last 8 weeks during COVID time. And as you can see, each of these companies have been mapped onto very specific SDG goals. There are 17 goals with 169 targets. Each of these companies have been mapped to specific goals, and we believe that this is something which is actually going to be the future in terms of how the impact investing is going to be looked at. And that's how we're going to actually looking at entire Fund 3 approach as well. Whenever we look at any investment opportunity, we will be looking at how they map onto the specific goals and targets in this SDG framework. Well, I think everybody knows about the India story, so I don't need to spend too much time, but I think we believe that India is actually the right destination when it comes to the current market situation, and of course, even going forward, we believe that most of the investors who've been investing in other geographies are already looking to put their money into India. So for various reasons. So I won't spend too much time. I'll hand it over to Vijay, and Vijay, please go ahead and share your presentation, and after that we can have more discussion.
Vikram, thank you very much. That was very insightful. I'm delighted to learn something about IvyCap and that you actually have a very robust ecosystem and network. And I noticed that there were about 30 accelerators that you collaborate with in some way, shape, or form, which is very much, I think, where we would love to be aligned with you. By way of introduction, ladies and gentlemen, my name is Vijay Tirathrai. I'm the Managing Director at Techstars. I'm based in Abu Dhabi, and as you can see, the space behind me is actually the WeWork space in Abu Dhabi, where we're based at a facility called Hub 71. It is now the new tech accelerator for startups in the Middle East. The organization that I represent, Techstars, which I like to just give you a bit of background information, and the area of sustainability that we are now taking a lot of interest in. Allow me to share my screen, so that I can share some data as well, as much as Vikram did. So let's do that. Pardon me for the silence. I guess just by way of introduction to Techstars, we do have a global footprint. We are based in Boulder, Colorado, in the United States. But as you can see from this map, we have an outreach program called Startup Programs, Startup Weekends in over 600 cities around the world. But also we invest in companies through accelerator programs, which we have about 50 locations right now across the globe in various sectors. To date, we've invested over 2,200 companies. We're now in 2020 are investing at the rate of 500 companies annually. And these portfolio that we currently have is valued at 26 billion and growing. And last year alone, our portfolio companies have raised about $2 billion in the marketplace. And if I recall correctly, in 2018, 1 in 20 companies in the United States that did a Series A company was a Techstars company. And here are some of them that maybe might ring a bell too. Many of these are software enterprise companies, either have been listed or acquired through trade sales. What I'd like to talk today about is more about sustainability, and we define sustainability in 3, I guess, subsectors. if you like. So climate change, business change, and adaptive change. And I'll just like to walk you through very quickly with some examples. But we see climate change as, redesigning our world in things that we existingly have: cars, homes, the environment, food systems that has an impact with climate. Secondly, we look into current businesses and how do we facilitate, corporations and startups to find a nexus in which they can transfer technology know-how to improve current supply chains and what have you. And thirdly, adaptive change, which is really how do you make businesses more accountable through measuring performance of the environment to influence behavioral change, carbon removal. So if you look at over the past 10 years, the decade that Techstars has been around, we've consistently been investing in, companies with climate change technologies. But what we see in the last 3 years is an increase in business change technologies, companies that actually are having corporates to be more accountable for the supply chain and how they can be more accountable towards, whether it's plastic use to minimize carbon footprint. So here's an example of what we mean by climate change. If you think about EV for cars, vehicles, you think about, vertical farming for food systems. These are good examples that are having an impact on our climate and environment. So one use case that that I recently invested in is a company called Novell, which is an energy board company. In essence, what it does, it stores energy from the grid. And as you can see from the visual there, it's really a board that flushes into the wall. The way we like to call it is that the building itself is the energy source. So this really takes advantage of the arbitrage between peak and off-peak rates. You can store energy, minimize, optimize the rates in terms of electricity bills, but also you can store using renewable energy and make your building more efficient in that sense. Another use case is in the area of business change. And we see increasingly in this area where corporates and startups are finding more collaboration. We recently invested in a company out of the EU, which is called Polyloop, just about 6 months ago. And as you can see in this illustration, it's a Pepsi bottle, a 1 liter bottle, in which the use of microorganisms to biodegrade plastic in the lab, within 50 days, it becomes a sludge, which that can be used into new recyclable plastics. And this cocktail of microbes can actually eat all 7 grades of plastics, including PET, PPP, and PE. So we see some really exciting stuff that these companies are now collaborating with large plastic manufacturers and FMCGs to change the way they procure plastics and dispose plastics, not going to the landfills. And then you have companies that's focusing on adapting and changing the behaviors. So if you look at SenseGreen, for example, is focused on air purifying the climate within buildings and residences, especially in the era of COVID-19, to be ensuring that it's safe from pollutants and bacteria. And these are technologies that are coming mainstream today in terms of allowing us to be more proactive in managing our behavior in better quality life, but also impact on the environment. So that being said, I want to say that also I think in the year 2020, and this is a discussion that me and Vikram will probably talk a little bit about, is it's going to be a defining year for us on the investment sense, because while we invest in companies, but we also recognize that for behavior to take place, we see social issues becoming an inflection point for environmental issues as well. And we see this intersectionality between social justice as well as environmental. So I think what we've seen with Black Lives Matter recently and COVID-19 is just going to put fuel into this huge change that we've really seen over the past couple of decades. And I think that this is very exciting from an investment point of view, where I sit, because we know that a lot of the technologies that's emerging today, there's a lot of huge social and consumerism that's driving that change. And a lot of it is reflective of what we see in social media today. So what does this mean? I think essentially, when we want to make a case for investment in terms of how we allocate our portfolio, you know, it just cannot be the investors, it just cannot be the promoters of or the founders of the technology. It has to be everyone participating in that realm. And similarly, like, you know, Vikram and IvyCap, which is focused on the sustainable goals, we too are now questioning how the companies can really impact the SDG goals. And what we've also seen is an increased amount of collaboration between large corporate companies. We have partnerships with all 60 Fortune 500 companies, like of Ford Motor Company, Barclays, Cargill, in various industry sectors that are coming together to collaborate and to take technology to at scale. And we think that people are not afraid to invest in early stage companies today, far more than it was, say, 5 or 10 years ago. And because they all believe that it can actually justify the triple bottom line, being good for capital returns, good for the impact on humanity and planet. So I think the conversation around, you know, is it make it smart investment versus is this good for your morals, or was it good for your capital returns? I think it's both. And I think that investors today, including LPs in our funds, are very readily acceptable to say that we can make a use case for sustainability, even if the returns take 7 to 10 years to see a return on investments. I just leave it there just to kind of prick everyone's mind in terms of the thinking right now that we're looking at from an investor's perspective. And just to, you know, chime in with Vikram's comments earlier, I think where Techstars is really focused on is really broad-based at seed stage companies, which has, you know, little revenue to show off, but really an exemplary team with track record in terms of defensibility in technology and the ideation that they can take to market very rapidly. And that's why we're excited about the space. I'll pause there because I would love to go on, but maybe through the Q&A we can chat more.
Yeah, thanks. That was a great presentation. So while you were talking, Vijay, I think, of course, that's very impressive presentation. You know, looks like you guys are doing a great job, you know, globally. And I think one of the questions which probably we should address is how do we define impact investing, right? So I think typically this is one question which I've seen in the minds of many people. You know, is it impact first, or is it returns first, or is it based on certain sector approach, or is it something else? And I think maybe you know, both of us can actually think about how to answer that question. I can probably go first, and then you can add your view on that. So the way we look at impact investing, and we actually you know, of course, looked at various things. You know, for example, the sector itself, you know, of course, does become an important qualifier in terms of addressing very specific needs and the direction of things. But I think over the last 1 year, what we at IvyCap have been actually focused on is understanding this entire Sdg framework, where it's quite interesting when we actually delve deeper into that. We realized that there was a lot of objectivity as compared to, typically there could be some subjectivity around the feel-good factors versus, are you making an impact which can be measured? And when we looked at this SDG framework, it was very interesting how there was a very clearly defined set of goals with very clearly defined set of targets, and there are 169 targets behind these 17 goals. And each of these targets actually come with very definitive statements on what you will achieve by the year 2030. And, and that becomes very interesting way to really track yourself. And then it really doesn't matter whether the sector itself is addressing that or, certain factors within that investment is impacting that. But as an overall framework, are the mindsets aligned to really achieving those targets and goals is what becomes more relevant. And we believe that, when you approach investing through a framework like that, when you start looking at very specific measures within the framework and whether it is related to, issues like poverty, hunger, health and wellness, quality education, gender equality, there's clean water and sanitation. Each of these factors, actually, when you start going deeper into those, they're very measurable parameters that become important. And, for example, in gender equality, you may not necessarily be looking at a specific sector where you're addressing that problem. It's an area which is applicable to any investment that you make. So effectively what you do, let's say you're investing in a fintech company, and the fintech company, maybe initially you were not thinking, how many loans you're giving to both the genders. And when you start tracking yourself, over the last 1 month, 1 quarter, 1 year, how many loans were given to women? What's your women workforce? What's your recruitment policy around women? So all those things, when you look at and you track yourself from the percentages in each of these areas, actually, in your mind, you're then tracking yourself and seeing whether you make meaningful progress, you achieve certain targets over a period of time. So we basically create an impact based on the change of the mindset of the entrepreneurs that we invest in. And therefore, even before we invest, we would want to see whether the entrepreneurs get aligned with those goals and targets. So that's how we look at, investing impact investing.
Yeah, that's great. And in fact, I'd like to just build on that. I think, when you say the entrepreneurs, that's really often our key emphasis. Often we say, how do you make an investment decision in early stage companies, which maybe not having a revenue, not even a product sometimes, right? And we say it's team, essentially suggesting that the founders and what they bring to the table in terms of the experience, credentials, and really the intent. And what you're alluding to is really the intent. Is the intent aligned with what they want to build? And we have a joke, often we say, are these guys a missionary type founder or a mercenary type of founder? Are they going into the business just to make a buck, or they actually are passionately driven to solve a world problem? And often it's aligned to one of the 17 SDG goals. So we try to look for that. And I think that's really the threshold that we want to be satisfied before we even consider them to be an investable company. But back to the definition of impact investing. For me, in simple terms, I would look at a spectrum of being, you have the traditional business on the left, and then you have the charities on the right? These are the philanthropic organizations, the NGOs are doing great jobs, but they are sustained on donations and grants and not really having a financial discipline to be able to seek a return on equity, because it's really difficult to often justify it. Impact investing for me is somewhere in between. You got both elements, and it has to have a very specific business model to create either social and environmental impact beyond just the basic operational impact, which serves a customer, right? In fact, what is coming into now increasingly more as a buzzword is ESG, which is environmental, social, and governance, right? And that is also putting into that definition of impact investing. So when you mention, for example, like gender, and the big issue in conversation in the United States today, and for most part of the world, is diversity and inclusion. That too is now the realm is expanding in the idea of impact investing. How and what are you making a difference in gender, race, creed, the less fortunate minorities? It's today not a nice thing to do. It's almost mandated that you actually have a policy around that.
Yeah, so that's very interesting. In fact, one of the questions that I was debating on with one of the persons who created the Sdg Framework at the United Nations was about the sectors and how do you really decide whether this particular investment that you're making, how do you ensure that you are actually investing in the right team? And I think a very interesting example came up, and that's something that really made me think. So, for example, there's a polluter. They're actually, creating a product, but they're in the process. They're actually creating pollution, and while the end product they're generating is actually good for the society, but in the process, they end up using material and the processes which end up creating pollution for the environment. The question is, would you invest in a company like that? And very interestingly, the answer came up that you would definitely invest in a company like that, because if the founders have the mindset to improve, then you would help them to change their processes to make sure that then they track themselves on the metric where they would see how they have reduced that pollution over time. If they're still working on a product which is good for the society, all they need to do is find better ways to produce that product. And as an investor, if you have the ability to influence that, you need to really discuss that upfront, that if they have the mindset to do that, and they're willing to be tracked on how they would change their behavior over time to make sure that they eventually build clean systems and processes, then that investment would be worth making to an impact lens.
So Vikram, let me ask you this. So that's an interesting point you made. I mean, how would you, as you were in the early part of your introduction, you mentioned that you have a impact-led fund. So I guess, how do you apply the frameworks of the 17 UN SDG goals, in terms of your criteria? How do you source the deals? What are the metrics perhaps you apply? Because at the moment, at Techstars, we are registered as a B Corp, but it doesn't really mean that we are necessarily, an impact company in the sense of what we invest in. We're evolving, right? We do have 3 specific accelerators focused on sustainability, but this is still very early stages for us. We're still in the infancy trying to learn this, and we do have a lot of companies that we've invested, some of which I shared. But I guess I would like to learn from you, what are the frameworks that you actually apply?
Yeah, so a lot of this is also driven by, who your investors are as well, or who do you want to target as your investors. There are various DFIs, for example, they're very clearly defined what specific goals are they really going to go after. In fact, when you try to look at some of these investors, they would very clearly say that, okay, I would like to solve the problem of hunger, or I would like to address the problem of gender equality or decent work and economic growth and things like those. And that, becomes part of your objective when you're looking at, specific investment opportunities. You actually then define or maybe pick up very specific goals out of the 17 goals. It's very hard otherwise to really take all the goals at the same time. For example, one of the goals is life below water. Now, unless you're going after specific companies which are really addressing that specific goal, you would not want to look for that as an impact. But of the 17 goals, you may only pick maybe 3 or 4 or 5. And if there are companies which are willing to go after maybe 7, 8, or 10, that's great. But even if you're going after just 1 or 2 goals and you're fully committed to making a change and impact in those goals, and you feel that you're actually differentiated or making an impact on those goals, that becomes a very meaningful way to look at those investments. So that's how we approach our investments. And also to give you an example, in fact, some of these goals are such that any venture capital fund or private equity fund would fit into those goals. For example, industry innovation and infrastructure. This is one of the goals. And where typically when you say that you're investing as a venture capital investor, there's very high likelihood that you would fit into that goal. Similarly, there's another one which is goal 8, which talks about decent work and economic growth. Now, if you're looking at, most of the times when you're looking at the investing through your venture capital, you are looking for decent work and economic growth, and most of your startups would fit into that table. But some of the others, for example, reduced inequalities, typically becomes a little tricky for the startups at very, very early stage when they are focusing on solving very, very specific problems with their resources and energies focused on, building the product and establishing the product market fit. The challenge is how do they really, establish that this is a goal that they're going to really go after. So one can actually pick specific areas and then say that, here are the areas we're going to really take as the areas that we're going to go after, and then, are willing to be tracked as on.
Do you see a conflict in the sense that some of these goals are best suited for, say, public sector investments? So whether it's, government grant money to institutional funds that are focused on infrastructural development, the B40, for example, that really is not the realm of traditional venture capital, because it's just so hard to perhaps establish a good outcome in terms of the metric that you can justify the return on capital. Do you find that in your experience?
Yeah, it's quite possible. In fact, that's the reason one needs to be very careful about selecting their LPs, because there could be conflicts among the LPs. So if you have, a DFI is driving you towards a specific goal, and you agree to those goals. And on the other hand, you have, let's say, a large number of HNIs or family offices who may have very different objectives. If you have conflicting objectives amongst your LP base, it could become very, very challenging in terms of how you look at your investment philosophy. So that's why I would say that, if you are going after, a specific theme of the fund, it's very important to communicate the key objectives and, how you're going to make your investment decisions, and avoid investors who may not necessarily understand the bigger picture of what you're going to go after. So that is an important point to answer. In fact, one of the other questions that came up was, it's across different geographies around the world. People are, slowly evolving. And one of the questions is that at what stage is India when it comes to ESG or SDG? And I would say in India, it's very early stages, especially for SDG. And I don't think there is any of the fund that I have heard of which would state itself to be a fund, that's going to be compliant with Sdg Framework. But the reason we've taken it up as a challenge is because, one, we believe that it's a perfect timing. It's the right time to look at, it's right time to get the mindsets aligned to this. It's important also from the perspective of the Sdg Framework, because it has a timeline of next 10 years. And if you start now, you can try and achieve or contribute towards achieving these broader goals over the next 10 years time frame. And the third is there is some level of mindset change already happening. For example, in the stock market, there is some, or the listed companies in India, there is some guidelines which says that if you are above a certain revenues or a certain threshold limits, you have to have you have to be SDG compliant. So, which is actually some positive direction which at least I'm seeing already happening in India.
I guess, just living off that example, I think if you look at my experience here in the Middle East, it's a very fragmented market when you think about countries like Egypt, Tunisia, to the UAE. There are, it's just Arabic that really unites these countries, but in terms of social economic development, they're all at very different stages. Whilst I invest primarily on behalf of Techstars globally, but I can just say that there are a couple of common themes that is of interest when you look at, impact companies that are looking at impact startups. One, I think, namely in fintech, is very strong, particularly for the B40, that is namely unbanked or underbanked, opening accounts. There's a lot of migrant workers, for example, in UAE coming from South Asia. And then there's a lot of remittance involved. And there's a huge opportunity to not only provide an efficient flow of funds, but also how do you ensure that they have an opportunity to save, to invest, and to perhaps direct some of the income towards upgrading or upskilling the jobs and so on and so forth. The second area is more about health and namely rising obesity. And there's a lot of health tech companies that are now addressing that because of, general income growth, and that's really affecting health. There's a huge youth population, and diabetes is number one in the region as well as a killer. So there's a lot of health tech related technologies trying to serve that market. And the third is access to education, and education not just in terms of providing rich content, but also in Arabic, but also the fact that private schools are not easily accessible to, as well as vocational skills. So a lot of this online e-learning content is coming. In fact, with COVID-19, it's become a blessing in disguise. It's really taken a huge boost in those areas. So when I think about the geography that we operate in and which are the popular segments, those are typical ones. But it's really hard to find what I call deep tech. Deep tech that's really disrupting, whether it's circular economy, for example. How do you recycle plastics, to environmental more friendly ways to harness energy, water, for example. 99% of water in UAE, for example, is desalinated from the seas. We've just taken an investment in a company that has released the world's first water pump that can desalinate using reverse osmosis membranes, from the ocean, and it's drinkable. These are the areas that I think, and that hits one of the 17 goals. So these are the areas that I think we are most excited about. And but the technology may not be authentically from the region, but the marketplace is right for a lot of the startups to come from elsewhere and capitalize on the growth opportunities, because it's virgin, it's hungry for these applications, and we see a lot of that, and that's why we're excited to be here in Abu Dhabi.
Well, that's great. In fact, as you mentioned, like the banking sector in India, of course, the opportunity we see is huge. And not just banking, is healthcare and quite a few other sectors. And just taking example of banking, as you said, large population in India doesn't even have bank accounts. And we have some of our companies companies in our portfolio. There's a company called FinPay, which is actually helping the rural population in India get access to their bank accounts, or help them open the bank accounts when the branches cannot reach them themselves, or they don't have ATM access. So there, this company has actually gone through the merchant outlets and provided this Aadhaar-based. Aadhaar is like a social security platform in India, which is actually already got more than 1 billion, population with Aadhaar IDs. So with that, a large population of India is already now having access or now opening their bank accounts. And I think companies like these have the potential to really disrupt the market and also create impact. So absolutely. And I think some of this, some of the other questions which come to mind, and maybe something that could be relevant for you as well is, morals versus, the, money, and typically this question comes in mind, right? How do you, what comes first? Do you first look at returns, or do you look at, the society at large? So I don't know how you guys look at it. So from our perspective, when we look at Sdg Framework, we actually look at all the filters. For us, it's not one against the other. We believe that, it's never either or. You can actually add a filter of impact and still make good returns. In fact, we believe that when you have impact as a focus, you can create much higher returns. So that is a belief that we actually come with.
Yeah, that's really heartwarming to say that, Vikram. I think it's the year is 2020, right? It's old school to think money versus moral. I think you cannot decouple that anymore. I think today, as investors, no doubt that return on investment is non-negotiable. However, equally speaking, are you making the right investments that you can influence and impact change is also non-negotiable today. And I think it comes hand in hand. I increasingly find it more easier to win over investors around that argument. I think, as you correctly said, given where market forces are taking us over the next decade, increasingly across on the macro level, businesses are demanding change in terms of how we operate, the use of energy to carbon footprints. If you are a startup, if you are part of the food chain, in the supply chain, invariably you're going to be the beneficiaries of that. So if you're investing a technology that is helping solve those problems and those pain points across the spectrum, invariably you're going to make money because the big corporations are already demanding that, right? So I cannot see otherwise. How could you operate as a startup in a space that is in a vacuum, that doesn't demand that? It is now mainstream. It is no longer a conversation for debate. And that's really how I see it.
Great. I can see that our time's up, Vijay, and I think this is a very engaging discussion, and I really enjoyed talking to you on this subject. And thanks everyone. And this was actually a great session.
Likewise, Vikram, thank you very much. It's a joy talking to you. I learned a lot, quite a bit as well, and I hope we do remain in contact, perhaps for some deal flows. But to the audience as well, thank you for listening. I hope you've enjoyed as much as we have, and don't hesitate to reach out to either one of us if you need further information or assistance. So thank you very much for the opportunity, Startup Impact Summit.
Yep. Thank you, Startup Summit. Thank you. Bye-bye.